Get Rich Education is brought to you by Norada Real Estate and International Coffee Farms.
Welcome to Get Rich Education with Keith Weinhold, giving you information and ideas on the investment that has turned more ordinary people into millionaires and billionaires than anything else, and can provide you with more wealth and happiness than you ever thought possible. Now, here's your host, investor, entrepreneur, business owner, and educator, Keith Weinhold.
This is Get Rich Education, episode 67. I'm your host, Keith Weinhold, back to help you build durable wealth for yourself. Welcome to listeners now in 152 world nations and whatever conduit you're listening through. iHeartRadio, iTunes, Stitcher, Spreaker, Overcast, SoundCloud, Castro, the GRE Android app. Thanks for being here. Today we have an Atlanta market profile, that is turnkey real estate investing in Atlanta, Georgia, with our guest, Georgia Residential Partners founder, Ken Corsini. You already know Ken's name because he interviewed me on GRE episode 63, which was aired 4 weeks ago. People are more concerned about the durability of their wealth now when the stock market has fallen with a precipitous thud like it has here in the first month of this year, largely on China and oil concerns. Well, if real estate values fall fast, that often doesn't affect your cash flow in investor advantage markets, and cash flow is often what you're buying for anyway. With stocks, okay, if you're foregoing growth stocks and instead you're buying more stodgy, established stocks, well, then your capital growth is slower and your cash flow there is typically pathetic too, okay? The average dividend paying stock in the S&P 500 pays you 2% per annum. And you're really, always going to buy income real estate with a significantly greater projected cash flow than 2%, okay? As in multiples greater than 2%. So to a lot of educated investors, when the stock market takes a hit, it can feel like a double whammy. Your overall balance just shrunk and you're being paid little to nothing every month at the same time, okay? An educated investor that wants to build wealth just simply doesn't tolerate settling for an instrument like buy and hold stocks for the long term. I'm often asked about what my favorite real estate investing books are, so I'm planning to put together a list of my recommended reading book list at getricheducation.com in the future to make that easier for you. You've got to give me a little time though, okay? My to-do list is not exactly small, but I know that it will go a long way toward helping you. In fact, today you'll hear a snippet of Rich Dad advisor Garrett Sutton's voice on the show. He's the author of the book Loopholes of Real Estate, which will likely be on that recommended reading list. The Rich Dad advisors, most of them have appeared here on GRE by now. Garrett Sutton on episode 15. You can hear Ken McElroy and I on episode 25. Josh and Lisa Lannon, episode 39. And Tom Wheelwright, whom has been on both episodes 19 and 62. Okay, the Rich Dad advisors, they have a great way of making complex concepts simple. That's really one qualification that they have for being advisors. Well, they do the same thing in their books that they do here on Get Rich Education. They make the complex simple. Another book that you'll see on this future recommended reading list is one of the greatest real estate investing books ever written. It's called What Every Real Estate Investor Needs to Know About Cash Flow. It is a fantastic book that really breaks down the numbers behind profitable real estate investing and how to do proper due diligence. That classic book is authored by Frank Gallinelli. I'm pleased to tell you that you're going to hear Frank and I chat on an upcoming episode of the show here in the next few weeks as I host the Yale University educated Frank Gallinelli here on Get Rich Education. Frank is a professor of real estate finance today at the prestigious Columbia University in New York City, and you're going to learn a lot from him. But today it's about Atlanta, and a name to know in turnkey real estate investing in the United States is Ken Corsini of Georgia Residential Partners. It's great to have Ken here today. Actually, we've been trying to get on the same page to have him on the show here for probably over a year now. So this is overdue, as I know a lot of listeners have had questions about and interest in the Atlanta market. So being mindful that we are an international show, Atlanta is a major U.S. city in the southeastern United States. Atlanta was established in 1837 at the intersection of two major railroad lines, and it has risen to become the cultural and economic center of that entire region of the United States. And Atlanta saw significant revitalization when they hosted the 1996 Olympic Games. Atlanta is considered a world city. In fact, it has the 36th ranked GDP in the entire world. So we're exploring a big, diverse market here today. We're going to talk with Ken Corsini about what his company, Georgia Residential Partners, does for an investor like you. Ken has both an extensive formal education and a practical street education in real estate investing, as you're going to find out today. Let's meet Ken Corsini. Georgia Residential Partners was founded by Ken Corsini in 2005. Besides being an active practitioner, Ken has a formal education in real estate. Ken has a bachelor's degree in risk management from the University of Georgia, as well as a master's degree in residential development from Georgia Tech. He's owned and operated Georgia Residential Partners from its inception, and Ken's been involved in hundreds of real estate transactions. Check this out. While at Georgia Tech, he defended his thesis on real estate values in Metro Atlanta, and he has years of turnkey hands-on experience. Ken just has a vast understanding of how and where to invest profitably in the Atlanta market. Ken is married with 3 children and lives in Woodstock, Georgia. I've long known Ken to be a reliable real estate investing name in the Atlanta market. So from Anchorage to Atlanta, here's a big warm welcome to Get Rich Education, Ken Corsini.
How you doing, Keith?
Hey, great. It's really good to have you. The market that you represent, I kind of think of that as a big, diverse market with a lot of different economic drivers, or cones as some call them. I mean, the Atlanta metro with 5.5 million people, it's the 9th largest metro in the U.S. They've had the world's busiest airport there for almost 20 years now. We've got the nation's 3rd largest concentration of Fortune 500 companies there. So how would you describe the character of the Atlanta market, Ken?
Atlanta has been a fantastic market. I've lived here since the mid-'80s, and a lot of people consider Atlanta the capital of the South. There's so many good things going for Atlanta, like you said, a lot of economic drivers. We've had ridiculous population growth for as long as I can remember. Infrastructure is always being added. Yeah, I can't say enough good things. And in terms of real estate, it's where I've put down roots and built my business and have had a lot of success because it's a growing market. And same with my investors. I've had a lot of investors that have invested with us and have done really well over the last 5 to 10 years.
We're looking in Atlanta. We're talking about the global headquarters of companies that are international, like the Coca-Cola Company, Home Depot, AT&T, Delta Airlines, Chick-fil-A, Rubbermaid, UPS. The list goes on. And these are businesses that are just not going to pack up and move somewhere else tomorrow.
Sure. Well, and the other thing I think to point out is that it's a very diverse economic group of companies. There's not really one industry or sector that defines Atlanta. It's not just tourism or just manufacturing or just distribution. It's a little bit of everything, which I think is one of the things that make it so viable and strong, is because it's very diverse.
Yeah, there are definitely a lot of legs there. So I guess within having all those diverse industries, with respect to where they're located and maybe what kind of tenant profile you're looking for, just where are the investor advantage neighborhoods, both geographically, north, south, east, or west? And then what are the names of some of those neighborhoods?
We sell a variety of houses, turnkey. And as you understand, I'm sure your audience understands what turnkey is. Essentially, they're houses that have been in disrepair. We've bought them, we've fixed them up, done full rehabs, we put tenants in place, and then we sell them to investors as a turnkey cash flowing asset. So day one, you walk in, the house has already been repaired, you've already got a tenant in place. And over the last 10 years, I've done about 600 to 700 of those houses. And we've done them all over Metro Atlanta. North, south, east, west. And the reality is there's advantages and disadvantages to different locations around Atlanta. So for example, we like to break our houses down into what we define them as A properties or B properties. A properties being houses that we sell for over $80,000, B houses being houses that we sell for less than $80,000. Now, I've sold houses as low as $30,000, and I'd probably consider those really C neighborhoods, maybe B neighborhoods, where the advantages in those areas are going to be higher cash flow, maybe less opportunity for appreciation. You're probably going to have a little bit more tenant turnover because you've got a lower price point there for rents. But then on the other side, I'll sell A properties, and I've sold A properties as high as, 150,000, where, the cash on cash returns may not look as strong in terms of cash flow, but you're going to be in a better area, better school districts, lower crime, and probably more opportunity for appreciation. So when you're looking at Atlanta on a map, you can really just draw a circle around Atlanta. In fact, there is a circle around Atlanta called 285. We call it the perimeter. And really people define their geography in Atlanta with the perimeter sort of as a reference point. So are you north of the perimeter, south of the perimeter? Inside the perimeter is a whole other world in and of itself. Where inside the perimeter really is comprised of your original Atlanta. So, back in the 1900s, Atlanta was confined within that perimeter. And so a lot of your housing stock is older inside the perimeter.
Okay.
And inside the perimeter, you've got just, a ton of different neighborhoods, some that you wouldn't want to be in the middle of the night or even during the day without packing heat. A couple miles down the road could be the new up and coming gentrified neighborhood, where the same exact house that you saw in the bad neighborhood is selling for $1 million. It's very, very tricky that you know your market really well when you're working inside the perimeter, because you've got the hot neighborhoods and then you've got the war zone neighborhoods. And those investors who know that the in-town market well actually have done really, really well over the years. If you kind of pinpoint, some local economic drivers that are turning a neighborhood in a specific area, there's opportunity to get in there and capture some really quick growth, some quick appreciation. And a lot of investors have done really well there. I'll tell you though, as a whole, our business has been more in the suburban neighborhoods outside the perimeter. That's really been our bread and butter.
Okay.
I would say 60 to 75% of the houses that we've sold to investors over the year have been to the east of Atlanta in a county known as DeKalb County. And let me take a step back. Metro Atlanta is comprised of, depending on who you talk to, over 15 different metro counties. So you've got a lot of diversity just within the MSA of Atlanta. But one of the counties that we have done really well in is DeKalb County. It's a suburban neighborhood. It's probably a little more blue collar than maybe the neighborhoods on the west side of town, but a really strong rental market. Lots of renters in those areas. Housing stock, 1970s, 80s, 90s. They just cash flow really well. So we've done really well on the east side of town. West side of town is Cobb County, which is actually the county that I grew up in, is going to be a little bit nicer, slightly better school system, probably similar housing stock as DeKalb in terms of age, but a little bit better opportunity for appreciation. You're going to pay a little bit more for the house. Probably the crime's going to be a little bit less. Your cash flow is probably not going to look quite as good, but again, you're sort of substituting it for appreciation.
So maybe those more, I guess I'll call them risk-averse investors might favor Cobb County more, where you're kind of on the higher end of that Class A property scale. You're going to have that better quality tenant and that better quality of school district.
Absolutely. And I think that's, regardless of geography, typically, if you're buying an A property, that's going to be the case versus a B property. If you're spending a little bit more, maybe it's a slightly newer vintage house, even if it's in a different part of town, you typically have a little bit more upside potential. But then, of course, you'd referenced my thesis from when I did my master's at Georgia Tech. That's one of the things. It's interesting. I didn't go looking for this, but some of the data that really just jumped off the map when I did that thesis was the effect of school systems on really holding property values. At the time I did the research, everything was caving in. I did like 2008, 2009. So the sky was falling at that point in time. But really some of the drivers that insulated areas from falling prices, the thing that jumped off the map more than anything else was school district, which I think most of us inherently know that, but to really see the data flesh that out was really interesting. So, in Atlanta, you can really look at a school system and at least make a judgment in terms of how your values are going to do over time. Not necessarily cash flow, but how your appreciation and your values are going to hold up.
Yeah, that's a really important thing to say. Well, another thing to say before we move on is, first of all, I think to this point, we've generally been talking about single-family homes, right?
Absolutely, yes. That really is what we specialize in, is single-family homes. Single-family detached, more specifically.
Okay. So when you have that perspective of living there since the 80s and kind of having this wherewithal or this conscientiousness of knowing that the school district's really important, does that factor in a good bit prior to you identifying what can be a good fix and flip buy before you go ahead and fix it up and flip it to an investor like me or my listeners? You really zoning in on that school district?
It's not necessarily that we're eliminating houses that are not in the best school districts, because if you can buy a house and sell it for a profit, I don't really care what districts it's in. If you find a house and you recognize, hey, it's in this school district, you have that more of an opportunity, I guess, to sell it, or it might be that much hotter of a market. There might be that much more demand for it when you go to sell it, if that makes sense.
Yeah, it sure does. So I kind of think of it in Atlanta as a market that's been really successful coming out of the economic downturn. I do kind of think of it as having a pretty terrific appreciation run up over the past few years. And why don't you tell me a little bit about the appreciation run up? And then, oftentimes when we have an appreciation run up, rents do not keep up with that proportionally, such that we no longer have that favorable 1% RV ratio. So any comments on that?
Yeah. So Atlanta historically, before the downturn, Atlanta was a very stable market in terms of appreciation. It wasn't crazy. It wasn't hot. It always sort of plotted ahead at 5%, very steady, kind of in line, correlated with, population growth, which was steady, job growth, which was steady. And then we had the downturn, and, some of your bubble markets, they popped and fell pretty hard. Atlanta wasn't really a bubble market, but it popped. I mean, a lot of I guess some of the fundamentals for, what created a pop weren't there, but we still experienced some pretty harsh decrease in values. And so Atlanta was on sale for 2010, 11, 12, just ridiculously good buys. And so for the last 2 years, 3 years, we've had some really good appreciation, but I think all we've really been doing is just recovering, getting back on track to where we were in terms of steady appreciation. I think I just looked at some data, and it was, I think, from Neighborhood Scout, showed that Atlanta over the last 12 months had been at about 9.5% appreciation, and over the last 2 years, just over 10% appreciation. Every data outlet's going to give you different numbers. So I pulled mine from Neighborhood Scout. It doesn't surprise me. I mean, I see that. I see that the numbers have really been on the increase over the last 2 years or so. To your second question, in terms of rents not keeping up, rents have been on the increase as well, but probably not proportional to how quickly prices have been on the rise. So you get to a point where it does become harder to get that same return on investment. Now, for us in our business of providing turnkey properties, we've still been able to hit those same numbers for our investors. Amazingly. I mean, the difference is that we're having to dig a lot harder and deeper to find those properties where you can get that, let's say 1% price to rent ratio, where it was easier for me to find those houses, to fix and sell. Now we've got to, send out 10,000 postcards and talk to however many potential motivated sellers. And it's a whole different ballgame now. Our investors don't necessarily realize that because they're still getting the same good deals and same cash on cash returns. It's just made it harder for us.
Yeah, it's really got to feel like searching for a needle in a haystack there sometimes with the way things have run up.
It's amazing how it's changed. I literally just got out of our weekly meeting with the team, and we were talking about how a couple years ago you could literally close your eyes and just sort of pick houses because there were so many good buys. And now it's just such a different ballgame. I mean, in the last 12 months, I think I've bought 1 or 2 houses off of the MLS system, and everything else has been off market, where we're really having to do marketing and talk to a lot of potential sellers to find those deals that still work.
Yeah, you can't exactly throw darts at a map with a blindfold on here these days. So, with that in mind, in the way that we've seen the appreciation run up, just, kind of average or median in what you sell. What's a median rent to value ratio? I mean, for example, can you get $900 rent on an $80,000 property? Or, what do you think the median ratio is there? How does that look?
I mean, I'd say we're right at that 1% price to rent ratio. I mean, if I'm selling a house for $100,000, it's probably getting $1,000 in rent. That's about typical for us.
Okay. And, a 1% RV ratio with a 20% down payment, that's usually a pretty good rough measure with today's low interest rates of what's going to produce cash flow. But, that's not necessarily true in every market. For example, you look at a lot of the Texas markets, you're paying property taxes of 3% a year or more.
Right.
What do the property taxes look like there in the Atlanta metro? And I know there's got to be, it depends when you're a sprawling 15 county metro.
Yeah.
But how does that look on average?
Well, you're exactly right. So you've got 15 different counties, and every county is going to have a different millage rate. But on average, you're anywhere between 1% and 2%, just depending on what county you're buying in.
All right. So on a national basis, pretty much under control in there on an approximate average.
That's right.
Well, it sounds like there might still be some opportunity to be had here, but before Ken and I are done, I'm going to specifically ask, how can the Get Rich Education listeners find the most profitability in Atlanta? You're listening to Get Rich Education. Our guest is Georgia Residential Partners Ken Corsini. More when we come back. I'm your host, Keith Weingold. Through Get Rich Education and International Coffee Farms, you can own your own half-acre parcels of a passive income-generating coffee farm in Panama for as little as $18,000. It's a low-risk opportunity with an average annual return projected at 12%. The farms are professionally managed for you on a turnkey basis, and you own the land. To learn more, visit internationalcoffeefarms.com.
Are you having a hard time finding great investment properties? Unfortunately, the best deals are rarely found locally. Successful investing begins with the right properties in the right markets. Norada Real Estate provides everything you need to invest in the best deals across the U.S. Our simple, proven system will help you create real wealth and passive monthly cash flow. Get your free copy of the ultimate guide to passive real estate investing at noradarealestate.com/guide. That's NORADA realestate.com/guide.
This is Rich Dad Advisor Garrett Sutton. To grow your wealth, listen to the always valuable Get Rich Education.
Welcome back to Get Rich Education with our featured guest, Georgia Residential Partners owner Ken Corsini. So Ken, as a turnkey company where you go ahead and you have a management portfolio there after the investor's gone ahead and closed, what are we looking at for vacancy right now across your management portfolio?
I don't have it right in front of me, but I think we're right around 8% vacancy as a whole on our specific portfolio. And right now our portfolio stands just over about 400 units right now.
What's the typical duration of a tenancy?
It's funny. It's some years we've hung around, 24 to 30 months. I think right now we're probably hovering around 18 months as an average length of tenancy.
Okay, that sounds pretty typical. And then, if a tenancy ever needs to come to an abrupt stop because we do have a tenant that doesn't pay the rent or violates their lease somehow, I mean, what are we looking at for Georgia landlord and tenant law? I think I know that favors the investor typically a little bit more than the tenant, but you want to talk some more about that and just how long it might take to get an eviction if things go wrong?
That's a great question. So, Georgia, as opposed to, some of your other states that are a little more tenant friendly, Georgia is actually fairly landlord friendly, which is, one of the advantages of owning rental property here. If a tenant's late, I mean, really 3 days later, you can have a pay or vacate on their front door. You can have a court date set before the end of the month and you can have them out the following month. I mean, realistically, 30 to 45 days to have a tenant out of a property if you needed them.
Okay, so we're talking more of a matter of weeks rather than months. And, typically in that part of the country, we just sort of have those states that do have those sort of investor or landlord-friendly laws. So that's really good to know. And then, it's probably hard to put it in one box since it's such a big sprawling metro here and you have 4 units in your portfolio. But I just want to talk a little bit about the quality of the tenant that you have. I mean, what is the profile of the typical tenant that rents a property from Georgia Residential Partners? Who are they?
It's tough to, like you said, to put a label because there's 400 some tenants. It's hard to put them in a box, but we do a really good job of screening tenants. We turn down a lot of applicants because we want to make sure that we put tenants in there that are going to stick and that are going to perform. We've got a lot of blue collar tenants. It's interesting. We see a lot of tenants that work for local municipalities. You're going to have plenty of retail tenants that, are making their 12, 13, 14 bucks an hour. Occasionally you'll get some, it depends. If you're more in an A-class neighborhood, you probably get a white collar tenant. But if you're in a B class, where it rents closer to $800 a month, you might have 2 working class people whose combined income works. And to that point, typically we're not going to put somebody into a property unless they've got a minimum 3-to-1 income ratio, for the rent. We want to make sure that they can afford their rent. The other thing we look at is previous evictions. I don't want to put somebody in a property if they've been evicted before. I mean, chances are if they've unless it's been years and years and years and they've proven that they've been stable in a job and paying on time in their previous places where they've lived. So, we look at those things closely to make sure we're putting quality tenants in these properties. Having done this 10 years, it's just not worth it to me to stick a bad tenant in a property, because it always comes back to burn us. And this, as you know, is a referral business. I mean, I want our investors to have a really good experience, make money, and ultimately come back to us to buy more houses. And to do that, I got to make sure we're putting good tenants in place.
Yeah, I mean, there's so many it depends factors when it comes to screening tenants. When you see some kind of credit shortcoming, that might mean one thing to you based on what it is or not. I mean, for example, if someone had a bankruptcy 4 years ago because they had some wildly out of control medical bills, but they've had stable employment since then, well, then a bankruptcy might be okay. But as soon as I see FED there on a court search, forcible entry and detainer, which is essentially an eviction, that's a lot more concerning than a bankruptcy for medical bills.
Absolutely. It does take some interpretation when you're looking at a credit report. I mean, if they might even have decent credit, but have a bunch of lates on half their bills. If they've had a bunch of lates just recently, then chances are if they're not paying their other bills on time, they're not going to pay us on time. But if it's old, like you said, if there's a story there and they've proven that they can pay on time for the last 12 or 24 months, then, obviously we'll consider that.
Yeah, there's often a story behind those raw numbers. So, and one thing that makes me think of, Ken, and I don't think this is anything I've talked about on Get Rich Education to this point yet, is investors, they seem to have a lot of thoughts that kind of span the gamut when it comes to government-assisted housing programs, which we often call Section 8 housing programs, where under certain conditions, the government gives a subsidy and often pays the majority rent portion for a tenant that meets certain qualifications. Some investors like that, okay? This is Uncle Sam writing the check. So some investors know that their tenant is going to be able to pay the rent, or at least the majority portion thereof is going to be there. But sometimes some see that as onerous inspection requirements that they have to comply with for their unit. I've often been an advocate of, hey, be responsible, provide housing that's clean, safe, affordable, and functional. You wouldn't want to supply something with faulty plumbing or a window that doesn't open anyway. So any thoughts on government-assisted housing programs, and, how many of your investors want to take advantage of that?
It's funny. I'm sort of neutral when it comes to Section 8. We've done lots of Section 8 houses over the years. We don't necessarily go looking and advertising in those places to find Section 8 tenants. But by and large, we've had good experiences. I think the pros that most people would point to when you're looking at a Section 8 tenant is the fact that it's subsidized by the government. I mean, if they can't come up with the rent, it doesn't matter. They're not paying the rent. The government is. And it's auto debited right into your account, which is nice. So month over month, you can expect to get payment. You don't have to worry about default. On the flip side, though, to get that tenant set up and on the platform, it's a lot of red tape, just tons of paperwork. And you can just imagine, a government run office, in terms of red tape and jumping through hoops, and it can just become so onerous that it's such a pain. But once you get over there, you get set up on their system and you deal with their inspectors, and I'm not sure we've ever passed the Section 8 inspection the first go around. It just doesn't happen. I think they feel like they're not doing their job unless they ding you on something. Literally as simple as like, just trim the bushes before we're going to pass this inspection. Just craziness. So if you can put up with that, and, it's nothing crazy typically with an inspection. It's like you said, it's stuff you're going to need to do anyways, and fill out all the paperwork and kind of deal with the red tape involved with, a government run office. I like the fact that you get your rent every month. That's the good part of it. And the other thing is, the tenant this is their free meal ticket. They're not going to screw it up. They're usually very compliant. They don't want to rock the boat. They just want to make sure they're getting their rent paid month over month. So we haven't had issues with tenants trashing the property or anything like that. They're usually very respectful, actually.
Yeah, so typically it's I think the housing agency calls it a case manager that's over there to inspect annually or more often to make sure everything works. And they really physically go through the unit a lot of times. But once you do jump through some of that red tape, I think for the investor, at least they do have an assurance that it's a lot less likely I'm ever going to have a lawsuit filed against me from my Section 8 tenant. Because first of all, they want to stay in the program because they're part of a pretty good program. And the case manager, that's, kind of third party from the investor perspective. They're going around and regularly physically checking it and kind of doing that inspection for you.
Yeah, to some extent, that's true. There's some accountability there that you've got somebody else's eyes looking at your property.
And, I've kind of found that when you do get a tenant in a Section 8 government-assisted housing program there, that tenant kind of tends to want to stay in that unit for longer. So, tell me if I'm wrong.
No, I think you're spot on. Absolutely.
Yeah.
Yep. I'm sure the average length of tenancy for Section 8 is longer than just a retail tenant.
I don't have any hard data on that, but yeah, I'd be really surprised if that weren't true. So you're probably going to get more than your 18-month median there when you have a government assisted tenant. I guess on one downside, I don't know, kind of the people that qualify for those kind of programs, I probably find a little bit more wear and tear on my units when I've accepted that sort of thing. Do you find that to be true, or?
Not necessarily. I feel like they take pretty good care of the property, again, because they don't want to lose their free ticket. So they tend to take pretty good care of them. I mean, no better, no worse. I don't think than an average retail tenant.
Just anecdotally, I don't know this for sure, but talking to others, I've understood that if you get kicked out of a Section 8 program, I mean, if a tenant acts up or abuses that, it can be really hard, if not impossible, to get back in there. So they really don't want to mess this up.
Yep, I've heard the same thing before too.
Just any other general thoughts, Ken, that you have on the Atlanta market and, why that can be good and profitable? I want to know how Get Rich Education listeners can do the most profitable thing if they're interested in investing in the Atlanta market.
In general, when I talk to out-of-state investors about Atlanta, a lot of times investors are shopping other markets. They're not just shopping houses in Atlanta or other providers in Atlanta. They're really shopping other markets. And, we'll talk in generalities about, a Memphis or a Dallas or a Kansas City or an Indianapolis. And all those markets have great things going for them. But I think what I typically point out about Atlanta is that it's one of those markets where you get the high cash flow like you do in some of the Midwestern markets, but you also get the appreciation. Where some of those Midwestern markets are really strictly cash flow markets and don't appreciate really well, where Atlanta, I feel like you get both. I mean, we've had 10% appreciation now really for 2 years, just strong projections for population growth and business growth. So your real estate's going to do well over the long term, but at the same time, you're locking into what are still, I think, great prices, 1% price to rent ratios. Interest rates are still strong. So I don't know. To me, I like Atlanta specifically for that reason, that you're kind of double dipping. You're getting the benefits of both cash flow and appreciation.
I truly think of it that way too. I can think of some markets where they definitely tilt strongly toward one, cash flow, rather than the other, equity growth, and other markets that do the other thing, vice versa. I kind of think as the teeter-totter is being level there in Atlanta, and you do get some of both. I mean, 10% sustained appreciation. So if someone has 25% equity in a property and they're leveraged 4-to-1, that is a 40% rate of return on their skin in the game. And we haven't even gotten to the cash on cash return yet. So is it 10% or greater cash on cash return? Is that pretty typical there?
Yeah, absolutely.
Okay, so we're up to a 50% rate of return just based on that very quick and dirty example that I'm giving there. And we haven't even gotten into the tax advantages, the loan pay down that the tenant's making for you, or the inflation hedging, which I'm really increasingly calling inflation profiting perspective that rentals give you when you have long-term fixed interest rate debt. So that's really terrific. Well, as we're kind of winding down here, Ken, Georgia Residential Partners, your company, I guess, what's really your fresh or unique angle? Like, what's the unique selling proposition of Georgia Residential Partners? How would you describe it?
I'm not sure how many turnkey operations there are out there. I mean, we're definitely, we fall into that category of a turnkey provider. We do a really good job of screening houses to make sure that they're houses that are going to do well for our investors over time. We do really solid rehabs. There's a lot of fly-by-night turnkey groups that are here 1 year and gone the next, that don't do great rehabs, where we stand by our work. We've been in this business 10 years. We're rated A+ with the Better Business Bureau. And we do 1 year warranties on all work performed on a property. So if somebody buys a house, we've done a $20,000 renovation. We give them a scope of work that outlines all of the work we did on that property. We give them the before and after pictures. If we replace the water heater and 6 months later the water heater breaks, you just call us up. We replace it. That's part of our warranty. And to me, those are marketing dollars. I'd much rather potentially lose money on a house and take care of an investor, knowing that investor's going to feel confident that he can come back to me, buy another house, tell his friends, they're going to want to come buy a house. To me, it's all about the relationship and taking care of investors. And we see that bigger picture. And I think that's why we've been successful for the last 10 years and maintained a good reputation here in Atlanta.
And how extensive are the rehabs? I mean, are we ever talking, new siding? How often are we talking new roofing or electrical or plumbing besides just some of the cosmetic stuff?
We do all of it. It really just depends on the house. I mean, if a roof's got 10 years left, we're not going to do the roof.
Sure.
We probably replace 90% of our full HVAC systems. It's rare that we try to fix an HVAC system. We replace a lot of systems. We'll replace siding if it's rotted. We do a lot of electrical work, a lot of plumbing work. I mean, I think on average, I would say an average rehab is probably around 20 grand for us. As high as 30 or 40 grand, as low as maybe 10 or 12, just if the house doesn't need a lot of work. But on average, probably around 20 grand. You can get a lot of work done for $20,000.
Okay, so an investor's coming in with a fully rehabbed place in a great diverse market. I guess, how often do you sell the property to the investor where it's already tenanted? Like, what percent of the time is there a tenant already in there by the time that investor closes?
95% of the time. And for the other 5%, we'll typically cover their rent until there is a tenant in place. Because for us, that is our selling proposition, is that you're buying a cash flowing asset that is producing income on day one. That's important that is our business model and that our investors are receiving that. So most of the time our tenants are in place. And that's one of the great things about Atlanta. It's just a really strong rental market. We don't have problems getting tenants in place. It's rare that one of our houses is listed on the market for rent for more than 30 days because they typically rent up. And if for some reason they don't immediately, then we typically cover that rent until a tenant's in place.
That's terrific. Well, any other thoughts about your business or the Atlanta market, Ken?
No, I think that's it. I mean, folks want to check us out. We've got a great website that I'd love to point them to.
Yeah.
One of the reasons I love sending people to our website, which is gainvesting.com, is that we've built a calculator that I think is super helpful for investors. And we purposefully made the fields editable. So an investor can go on there, and if they want to be super conservative with, appreciation or insurance or taxes, whatever they want to plug in there themselves and create a pro forma, they can do that. And then they buy based on the numbers that they've projected, not just the numbers that we've spoon-fed them. So I love to send people to our website. You can browse some of our inventory. The other thing I do want to say, though, is that there's a lot of inventory that gets sold that never makes it to our website. So I don't want folks to go to GA Investing and think, hey, I don't see anything up here. Nothing new. Honestly, what typically happens is we build a relationship with an investor. They reach out to us. They get pre-qualified. They let us know they're ready to buy. And houses get sold before they ever really get marketed. That's really, for the last year, 2 years, almost everything gets sold before it ends up on the website. That's how we want to do business, operating off of relationships and knowing people and what they're looking for. And when a house becomes available, we know who to call because we know what they want. So, if somebody's interested, they've checked us out online, I would definitely say give us a call, start that relationship with us, and we'll see how we can help you.
All right, Get Rich Education listeners, you can check out gainvesting.com to learn more about Ken Corsini and Georgia Residential Partners. Ken, thanks so much for coming on to the show today and getting our audience more familiar with the Atlanta market.
Thanks so much for having me, Keith. I appreciate it.
Well, great job from Ken Corsini today. Ken and I were joking off microphone about each other's perfectly coiffed and gelled hair in our profile photos. You can see that side-by-side comparison on the episode 63 thumbnail photo at getricheducation.com. It's like we're auditioning to be on an episode of The Bachelor TV show or something, so no such thing. I'm happily married to Mrs. Weinhold. Well, do you want more wealth in your life? One way to think of it is this. The world already has your money. Yeah, that's right. The world already has your money. Where is it? The world already has it. All you need to do is prepare yourself to write a withdrawal slip to the world. That withdrawal slip is also known as a purchase contract on cash flowing real estate in a sustainable market with due diligence and a competent team. And after you've bought your first piece of cash flowing passive real estate and you get that first check in the mail after that first month, you're like, wow, this stuff really works. Investing involves risk. You've hedged your risk when you deal with seasoned pros with local market knowledge like Ken Corsini. Again, Ken's company website is gainvesting.com. Thank you for investing your time with Get Rich Education. Until next week, I'm scouring the United States and the world to help you build your wealth, especially with passive cash flowing assets. So check out getricheducation.com. For Get Rich Education's developer, John Collins, sound engineer, Vidran Jampo, designer, Nikon Roy, I'm your host, Keith Weinhold. Don't quit your daydream.
You've been listening to Get Rich Education, telling you what the wealthy won't tell you about real estate and investing. If you enjoyed the show, please take a minute to visit iTunes and leave your comments.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.